Hello and welcome to the paid weekly recap for the week ending January 16th, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. I also urge you to read the characteristics and risks of standardized options available at the link highlighted. And if you need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap for this past week. So the big news for the 10-year yield was the rally on Friday. 10-year yield started to rise as some shifts in FOMC president expectations changed, as well as a little bit of concern on just general macroeconomic elements that were causing some selling of bonds. Now, on that note, we look at the S&P 500, and the S&P 500 was down slightly on Friday. For the whole week, it was down slightly. Monday made a new high, chopped down, recovered on Thursday, faded a little bit on Friday. The big element to know now was that over the weekend, things shifted with Greenland. We're talking about another tariff situation, tariff threats on Europe over Greenland. That's going to start this week off on a weak note. Overnight futures are down. We are looking at a weak start to the week. However, over the course of last week, general chop as earnings were okay. JP Morgan earnings were a little bit weak. Other earnings helped to create some recovery, but overall, nothing major for the broad market other than more chop after attempting to make a new high and maybe enter a bullish trend that looks for now to be negated. Tech has been very sideways, not a new all-time high, testing the recent highs from late November, early December, early December. But overall, we've still got some room before we get to the all-time high, which was made at the end of October. With a risk-off tone expected for Tuesday morning after the holiday weekend, I expect to see tech down again, and this may shift down and find support at the 100-day moving average, or maybe we're going to end up with a bigger pullback. It was around this time last year that we started the tariff war concerns with China. 1 year later, we're now looking at it a little bit more intensely with Europe, again, over Greenland. The small cap market has continued to grind higher. So there has been money flow rotating into small caps since the beginning of the year, and that has continued. It's not necessarily been in financials. A lot of it's been in the energy sector as oil prices have risen. Overall, IWM looks pretty solid here, but much like the rest of the market, I expect to see a dip to start the week coming up. The VIX started to rally aggressively here over the weekend. So this cash VIX, we've got the update for Monday morning. We're up, pushed through the 18 level, tested 20. There is some concern and some fear going into the market to start the week. On Friday, it had started to shift lower. Over the weekend, starting to shift back higher. So again, we're looking at a potentially tumultuous week ahead. In regards to the past week, we had one paid signal, the idea, which was to sell a put credit spread and RCL on the dip. These are momentum-based stocks. It had fallen down to the 200-day moving average and looked to be finding support. Into the end of the week, it continued to fall instead. So that support did not hold. No major bounce back, unfortunately closing just below the put credit spread strikes at 276.01. The idea was looking at selling a 280, 277.5 put credit spread expiring on Friday. The stock ended up down 6% in the last 3 to 4 trading sessions. The put credit spread ended up taking the full loss, unfortunately, as a result. It looked like a potential for a dip buying opportunity, but the market did not go through with that side of things. And we'll look for new opportunities next week. We'd stayed lean with only one idea this week. Looking at continuing to stay generally lean given the uncertainty and a lot of fundamental inputs coming in between earnings, Venezuela, Greenland, always on our mind, China, Russia, etc. There's a lot out there that can shift out some of the technical trades and some of the momentum-based AI signal trades. That said, we are still finding good performance in the live trading room as well, staying lean with paid while we look at other opportunities, maybe off of earnings and other scenarios such as that. So earnings trades really coming into high focus right now. Continue to use the AI-based signals for some opportunities and some ideas. Um, we will almost certainly have at least one new trade this week in paid, but we won't be looking to get overly aggressive given the fundamentals being a driving force for the market. When fundamentals calm down, technicals take charge, and we can be more aggressive with bigger positioning and more positioning. So for now, continuing to try to stay lean with the risk. Unfortunately, we had the loss side of the trade this week, but that's going to happen here and there on any trading system. So we have to take the winners and the losers together and just understand that over the long haul, there is a general expectation of growth. And we'll look both at the put credit spread and the long call positioning, depending upon both market price action conditions as well as implied volatility conditions, which initially are looking to be elevated coming into the week. If you have any questions, you can always email me. I'm Keith at yellowtunnel.com. Vlad is Vlad at yellowtunnel.com. Happy to answer any questions. And looking forward to a potentially exciting week ahead. It certainly looks like it's going to start that way. So keep an eye on your inbox for more ideas and more information, and we'll keep plugging along. Thanks again, everyone.